Hello traders and welcome to video 2 of this live trading webinar series. It's still Narpan here, founder of Master the Markets Illustrates Conference and the Traders Open Day. So yesterday, in the first video, we just actually looked at the cable trade, right? And all we were saying over there was, if I were to just erase off today's one, we were just looking at directional bias yesterday, weren't we, traders? So all we were saying in that video was just how to form a directional bias and the three things that you would look at. And eventually we said cable would be on the upside, it will make a trending more to the upside. And for dollar Swiss to the upside as well, we said. But looking at how things are today, yes, this one did go to the upside, but however, I must say, making money on this on intraday because of the spike to the bottom and then up to the top can be a bit tricky. And in terms of dollar Swiss, looking at that, you wouldn't probably have taken a trade on the 1 hour. We'll look at all of this more in detail uh, in the live trading webinar on that day and how we analyze stuff, right? And I'll be posting all these videos to give you a flavor as well. I think in today's video, I just actually wanted to just cover two basic concepts which we're talking in the live trading webinar as well. One is the concept of trending bars, which I just brushed upon a little bit yesterday to create your directional bias. And the second thing that I want to talk about is the stretch. All right. Now, let me get on with this. So trending bars traders, okay? It doesn't matter what time frame you're looking at. Now, for you beginners out there, the market, if you're looking at vertical bar, as the name suggests, is a vertical bar with a high and a low. Usually when you look at the markets, they will have two more horizontal lines in them, one to the right and one to the left. This one here is what we call the close, and the other one here on the left is what we call the open. Some of you do not know the basics and want to brush up on it, especially those very newbies. You can always look at our 5-day video course for beginners, which is Trader Starter Pack, right? So in any case, that's how the market in terms of a vertical bar chart is represented: high, low, open, close. Now think about this. This is how we learn from the quants. Um, let's say we delete the open and the close, right? All you're left with now is just a vertical bar, high and low, right? That's all it is. Now, from that point onwards, you can only get four more bar patterns in the market, okay? One is the next vertical bar making a lower low, right? Like that. Or a higher high and a higher low. Or we can get an insider bar, or we can get a outsider bar, right? So there's only four ways in which the market can move in terms of a vertical bar representation. So all these are vertical bars. Even if you talk about candlesticks, some of you have heard of it as well. That again is vertical bar as well, is it not? Yeah. If you remove the wicks, just vertical again, isn't it? Just the horizontal lines just being made into a box. That's all it is. Right, great. So now that we understand this, the trending bars actually is the ones on the top, this first two bar patterns. So this both at the underneath, we cross out. It's just either this one which forms a higher high and a higher low, or a lower low and a lower high. So if we were to apply that principle here, let's see, yesterday we talked about bottom to top or top to bottom, right? So over here, if you look for a bottom to top, the only way you can go up higher is only by having higher high bars, is it not, traders? Right? Yeah, higher high bars like this. So now let's take a look. Now, between these two, no, we don't have trending bars here, isn't it? Because this bar's high didn't go higher, did it? They're all insider bars, right? But if you notice, if you're a bit more sharp, you can see that between these two bars, this high was higher than that, and that low was higher than that as well. So within the insider bars, they were trending bars. And then after that, you can see again, this high is higher than that, this low is higher than that as well. Remember, forget about the closest for now, and then this can make more sense, make a bit more obvious. Now, these two are much, much more obvious, is it not? You're just having something like that, right? Forget about the close again. All you're looking at is the high and the low. Trending bars, yeah? So we'll teach you one very simple strategy just based on trending bars alone to help you identify market exhaustion points and then to capture the turning point for getting consistent performance. Now, in terms of here, then after it came to this point here, traders, you can see that it became a insider bar, right? So over here, then it became an insider bar. No, not a trending bar here, isn't it? Then you can see that today's bar, however, is an outsider bar in relation to this. So if I were to take out this one here, so you can see that this one here is an outsider bar today. All right. So let's see, based on that understanding, let's take a look at dollar Swiss. So dollar Swiss, what is it today? I mean, comparatively between these two bars over here. Do we have trending bars? Remember the four bar patterns I said, like this or this. These two are only trending bars, right? Everything else is either a insider bar or an outsider bar. So all you got to ask yourself, these two bars here, the most two recent two bars, do they fit into these two patterns? The answer is no, isn't it? So it's not trending bar, it's actually insider bar today. Let's carry on to euro dollar. Aha. So what do we have today? Remember, don't worry about the open and close, okay? Just remove that, remove that, remove that, and remove that. What do we have? We have trending bars to the bottom, isn't it? Like this, right? Yeah, that's what we got anyway. Next, what else we got? Aha. So now we got the Dow Jones. Again, this not trending bar again, right? Within these two bars, the most two recent bars. We don't have that. It's an insider bar. All right. So good. I guess you guys get the idea now on trending bars. Yeah. So that's the thing all about trending bars. We'll be going through this concept, developing it further on the live trading webinar, and then making it a strategy out of it. Yeah, it's really, really incredible how we always quantify things, systemize it, methodological, and then we practice it on real time as well. There's very few people that I've seen, actually, in fact, I've not seen anybody who actually does this. The next thing what I want to teach you is called the stretch. Now, the stretch is very important concept for intraday trading. It's all based on price, you see, traders. We don't use any moving averages or indicators or anything. All price. Okay. Right, and the stretch was very popularized by a very big institutional hedge fund trader today, Toby Crable. All right, you all can search into that. Very big quant trader. I mean, his hedge fund is about $1 billion today. Right, now taking a look at that now. So, what is the stretch? So, before I show you this screen, okay, maybe we can just use this screen here. That's totally fine. I mean, if you remember, traders, that I said that if you remove the open and close, you get a high and a low, isn't it? Just a vertical bar, just like that, right? Now, in this vertical bar, yeah, all we want to say is that if I introduce the open is always is a horizontal line to the left, okay? For you beginners who are not very familiar with that. For intermediates, we're very, very used to this. So you can see that in this bar that is forming at the moment, this is the open over here, isn't it? So you can see then over here that's the open. Open is always to the left, huh, traders? Okay, of the bar, right? The vertical bar. Right, now the stretch is basically, by definition, you can write this down. The stretch is basically the nearest extreme to the open. The nearest extreme to the open. That's what the stretch is about. All right. So you guys tell me. The nearest extreme can only be the high or the low. Okay. So the low and the high over here. This is the low. That's the high. So tell me, according to this diagram that I've drawn here, which is the nearest extreme? The nearest extreme is it the high is the nearest extreme or the nearest extreme is the low? Think about it. The distance between the high to the open is here, right? And the distance between the open to the low is here. So which is nearer? Of course, it's very obvious, isn't it? It's probably this one here, right? Low here. So that's the nearest extreme. Okay. Now, in terms of here, in the 1 hour time frame, if you go through more in the videos on the live trading webinar, you can see over here, traders, is that this blue line here is the open. Okay, this is the indicator, bespoke indicator that we have created. All right, and you can see that you tell me now as the bar is forming, which is larger, this to the bottom or this one to the high, which is more nearer. Looks like this one here, isn't it? So that is the stretch as of now. Okay. Right. Anyway, I think we'll keep to the daily. I think it'll always be a bit more simpler. Let me just take a look at, we can take a look at cable. So for example, if we want to take a look at this bar here, the red one, where is the stretch? The open is here. Let's erase off the close. We don't need a close. The open is here. Which is the nearest extreme? Is it the high or is it the low? Hmm? Yeah, most of you will get it right. That's going to be a high, right? Nearest extreme is to the high. So the stretch is to the top. Okay. The next one is this one here, isn't it? So over here, the stretch over here, where is it towards? To the bottom or to the top? To the bottom again, isn't it? Again, another one to the bottom, right? Over here, where's the stretch? The stretch is actually to the bottom. Over here, the stretch is to the top. Over here, the stretch is to the bottom. Okay, over here, the stretch is to the top, right? So that's what we got. So just go and practice that yourself. You can apply it on any instrument. Dollar Swiss as well, you can see. Where's the stretch today for this bar here? Where's the nearest extreme? Forget about the close, the open, the high or the low, right? So where is it then? Is it to the high or is it to the low? Where's the nearest extreme? To the low or to the high? Yep, to the high, yes. Over here, where is it? To the low. Over here, to the low. Over here, to the low, right? So that's what you have to know in terms of the stretch. So these are two basic concepts that we've gone through today. So one is the trending bars, which we've gone through, right? So go revisit that. Very powerful concepts, by the way, all based on price only traders, yeah? And then the next one is called the stretch. All right. So trending bars, remember? Just recap again. It's either higher highs, higher lows bars, or lower low, lower highs trending bars. All right. And the stretch is the nearest extreme to the open. Okay. So that's all we covered today. So revisit these concepts and go practice it yourself. Look at different markets. Even if you look at the Dow as well, it's all the same, right? It's going to be the same. Trending bar concept, stretch will all be the same because it's price. And that's why it's so invaluable learning about price. And so far that we've been in industry and that we've been trained by other people as well, we've never seen anybody teach price like the way that we do. Pure, naked price action. Okay, people will tell you this price, that price, they do know, but when you come to it, nothing is like this raw. But not only this is important, but then how we apply it and how do we monetize it and how do we consistently execute it for consistent performance is the key. All right. So we'll be talking more about that in the live trading webinar. We'll be happy to see you guys there, and I will see you all also in the next video. I mean, in the pre-lead up to our live trading webinar coming up. So I'm really looking forward to that. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.